Hello, everybody, and welcome to the Hardcore Finance Show. We're here with Andy Edstrom, who's the author of the amazing book, Why Buy Bitcoin. I really loved this book, and so thought it would be a great idea to bring Andy on the show. So, Andy, how are you?
I'm well. How are you, Shimon?
I am very good, very good. So I loved your book. It brings like a really kind of financial analytical aspect to analyzing the value of Bitcoin. So that was really nice. So maybe you can tell our listeners, how did you get into Bitcoin? You come from the traditional finance space, is that correct?
Yeah, that's right. I come from the dark side of traditional finance. I made my career starting on Wall Street. I worked for Goldman Sachs for a couple of years. Then I worked for a private equity fund that spun out of the Carlyle Group. And then I spent about 6 years at a hedge fund. And then I joined my family's firm, which does wealth management. So that's been my path. And yes, I am definitely I'm definitely a product of legacy finance. And in fact, one of the things I talk about in the book was that I managed to make, a pretty decent career, 15 years plus in finance before I figured out what money is and how it works. So like many others, Bitcoin was the forcing function for understanding money. And like many others coming from legacy finance, I really didn't understand money until I started studying Bitcoin.
Very cool. Yeah, I remember. So both Alex and I went to BCG, to the Boston Consulting Group, and I remember there was like a partner. I also didn't know what money is. I just knew stock market always goes up. And one of the partners basically said that the secret of success in life is leverage yourself as much as you can and don't get a margin call. And then as the government prints more money, you'll do great. So I
That's
always
great advice. If
yeah.
you got that advice a long time ago, then you were probably ahead of the pack. I do want to say, though, the key assumption in there is that you can't get margin called. And I don't mean to go off topic, but I published an article back in March in BTC Times, and the title was "Don't Get Wrecked," and the topic was "Watch out for leverage," when buying Bitcoin. I personally am looking forward to a future in which we can borrow against our Bitcoin collateral without margin call provisions, right? I'm talking about term debt, sort of like Michael Saylor has with MicroStrategy, sort of like you have with your mortgage. There are a couple of providers in the market. Unchained is one that comes to mind, but the interest rates currently are exorbitant, and I'm optimistic that eventually we'll get to a place where you can pay a single-digit % interest rate for term debt against Bitcoin collateral. But my opinion is that using any kind of debt, that's basically margin call style debt in Bitcoin is a good way to get blown up. It's a good way to get the thesis on Bitcoin right, the investment thesis, and yet still wreck yourself just because, you get a massive market downturn in a short period of time that you weren't expecting, such as we recently experienced. And I fear for many people. I fear for plebs who are trying to lever and juice their returns with a little bit of extra leverage, and then end up getting smoked.
Yeah, I mean, it's so unfair that like with real estate, we have all this like regulatory capture. Like it's so clear to me that like real estate as an industry, it's such an old industry. And so, yeah, of course the government is going to like, support your mortgage if it ever is underwater. But like, yeah, the government will not support Bitcoin if it's
That's
underwater. So,
that's right. I totally agree. And when people ask me about, okay, well, let's say I want to apply some leverage to my Bitcoin, like how can I possibly do it today? The one option that I do concede to them is, okay, if you own a home, and you have and you could do a mortgage, right? And that's a term debt structure, and you have, cash savings, so you have some runway, to cover your interest payment for at least a halving cycle in Bitcoin. then could I get, can I get comfortable with borrowing against your house, to buy Bitcoin, or borrowing against your house to avoid selling Bitcoin? Yes, maybe. That's like the one type of debt, but it is a difference in structure. I mean, being able to borrow on a term basis where, as long as you can make that mortgage payment, make that interest payment, makes a world of difference. But I share your views on the real estate market. I mean, it's probably the most manipulated asset market in the world, which is one of the reasons why it's the largest asset market in the world, arguably.
Yeah, totally. And so we can totally dive into that. I kind of skipped over intros. I would love to hear your story of how you got into Bitcoin. What I try to do on this show is to not repeat. You have many amazing interviews with other podcasts where you go like really deep into your background. So maybe quickly, what was the light bulb moment, working in traditional finance and all of that, and, life is good, the future is bright. What made you think of Bitcoin as a like investable asset?
Yeah, it's a great question. I think, to be honest with you, it was NGU technology and it was greed. So it was it's going up, which made me dig in and spend time. And I guess that for me, the realization that the debt problem was unrecoverable. In other words, we've already, passed the point of no return on too much debt in the global economy, and that therefore the most likely exit was printing money, and therefore, having hard money would be crucial. So I would say that was probably the aha moment. The logical piece for me was understanding truly the scale and depth of the debt problem, and the realization that Bitcoin could be a solution to that.
Yeah, that's so fascinating. I personally got, first of all, I've told this story, but I want to tell you, I'm so sad that I listened to professors, because I had two professors in my life that were very important. One of them was the professor in business school. I went to Kellogg, which is like a very Keynesian school. Chicago were our arch rivals. And they were like, oh, it's the monetarists that don't care about the children. We care about the children. So I took money markets in the Fed. And they were like, the light bulb went out when the professor is like, look, I mean, we can just like print our debt away. And it's literally the plan. And he showed us the plan of, like, back then it was Operation Twist. It was part of the QE of like 2011, I think. And he's like, yeah, look at this. It's like, it's awesome. We buy all these assets, right? The fact that we buy them makes their price go up, and then we can sell them into the market and the taxpayer makes money. It's amazing. It's a win-win for everybody. And it's like, something doesn't work there.
It's magic, isn't it? It's monetary magic. How amazing that they can pull that off. And yes, I was trained a Keynesian, in college, and yeah, it was lots of formulas and math, and it was a distraction from some of the assumptions. As with all things mathematical, if you get one or two of the key axioms wrong, one or two of the key assumptions wrong, well, then the whole edifice crumbles. And yes, I'm a big believer. Well, I don't know if believer is the wrong word. Let's say I'm quite skeptical of the notion that you can print as much as you choose and then readjust or settle up later at will, as is suggested by those who are promulgating this MMT, modern monetary theory. And yeah, only time will tell, but I'm in your boat. I'm quite skeptical.
Yeah, I have a guilty little pleasure, which is listening to podcasts of like far, far left people, like far, far left, like people who like criticize Bernie Sanders, but economical podcasts. And like they really hate MMT and the basic income, because they're like, no, it should be basic jobs, because you have to work for your like the services. And then one guest asked them, wait, but what happens if an employee shows up drunk? Like, you need to be able to fire them. And they didn't quite have an answer for that. But
Yeah, and the Europeans, generally speaking, have experimented with that a little, right? In different periods of time. I think of France, of course, where it's historically been very difficult to lay people off, right? Very difficult to separate a relationship with an employee. And yeah, you get bad outcomes if there's no way to dissociate from deadbeat employees. The opposite is true also. I mean, imagine a world where you can't quit your job, where the employee can't leave the employer. That's equally bad. So yeah, it doesn't work. There's no market. Let's put it this way: where there's no market, no functional market in anything, whether it's labor, as we're talking about now, or it's goods or services, or it's money, for example, where there's no unmanipulated market, you get strange and bad outcomes.
yeah, absolutely. Cool. So let's talk about your book. What I really loved about your book, it had a very sober analysis of the situation and of the likely outcomes. You basically list here are all the outcomes that can happen, but here's what's likely. So I would love to hear what's kind of your investment thesis for Bitcoin briefly, and then we can dive. I have some very interesting follow-up questions that I want to ask you. But first of all, maybe for our listeners, first of all, guys, if you haven't read the book, please buy the book, Why Buy Bitcoin? It has both a text and audiobook version. I own both. They're great. So Andy, what is your thesis of why one should buy Bitcoin?
Yeah. Okay. Well, thank you for those kind words about the book. I really appreciate that. And yeah, I sometimes struggle with where to begin. Um, Maybe we'll go back to what you were talking about, sort of the possible outcomes for the debt problem. And I see six, right? And I sort of look at the options or the decision tree, and I sort of cut off the branches that don't make sense. One is austerity, i.e., belt tightening, which is living within your means. It's governments spending less than they take in income. Okay, politically very difficult, probably impossible. In fact, most governments have gone in the opposite direction, right? Especially lately. Huge budget deficits. Okay. Option two, mass defaults. Uh, well, that's extremely painful. That looks like the Great Depression. And a whole generation of Keynesian economists, including and especially the ones that have held power recently, such as Bernanke, such as Yellen, were schooled in the Depression, and they take the view that that's got to be avoided at all costs. So unlikely that that's going to be what's allowed to happen, that we just have lots of defaults. A jubilee or a debt cancellation, that's a concept from biblical times. The problem with that, obviously, is that it calls into question contract law and property rights. If you're just getting rid of debts, you're just saying arbitrarily, okay, your mortgage is canceled or reduced, or your student debt is gone, null and void. It's possible that you can have some of that, but if you have it on a large scale, then the rules of the game basically go away and the foundation of the economy is shaken. So that's tough to do. More likely is that we get a combination of redistribution. Okay, that's basically tax and spend. That's ongoing. We're seeing that happen now. When I wrote the book 2+ years ago, that was my view. And then surprise, surprise, we got the pandemic and huge stimulus and, government checks, the stimmy checks, as they say. So even I've been surprised at the rate at which that has occurred. I didn't expect it to happen in such size, and it's already happened and continues to happen. Option 5 is financial repression. We haven't seen too much of that. But basically the idea is, lowering interest. Well, I should say we have seen parts of that, which is the lowering interest rates, right? Your bank account yields nothing. That falls under the heading of financial repression. Capital controls, though, is another possibility, or forcing certain entities basically to buy government bonds. Those are the steps we haven't seen yet, but it wouldn't shock me to see more of that in the future. And then, of course, finally, option 6 is, well, just printing money and spending money in such quantity that you eventually get significant consumer price inflation, such that the real value of the debt, or the the purchasing power adjusted value of the debt, goes down. And that seems to be the easiest and most likely option, let's say, that governments have, that monetary authorities have, that central banks have, to deal with this debt problem. So that's the big picture. And then, as far as how do I value Bitcoin? Bitcoin is so many things. I mean, it is, first of all, obviously digital gold. So it already has taken market share, I would argue, from the gold market. It is a hard to confiscate store of value. So it's sort of an offshore asset. The gold market is $10 trillion plus. The offshore asset market is 10 to 30 trillion, depending on who you ask. It is a store of value that's likely to take share from other stores of value, like real estate. You mentioned real estate, obviously, before. Real estate is a huge asset class. I mean, it's globally, it's hundreds of trillions of dollars. And so if and when Bitcoin takes a significant, let's say, portion of that, it's likely to, let's just say it's a big, even if it's a small percentage, if it's of a big number, then it could make a big difference in the value. And there's the category of fiat, obviously, just becoming a medium of exchange and a transactional currency. That, to my mind, is still far off in time, likely. Although I have to admit, I didn't anticipate El Salvador. I didn't anticipate a government, declaring Bitcoin as legal tender. We'll see where that goes. My suspicion is that, yes, there will be some transactional use of Bitcoin. There'll be more, perhaps, remittance use of Bitcoin, for El Salvador. I don't know that well, let's put it this way. I think a lot of people will transact, via the government fund that basically does an instant swap into dollars. We'll see how the details come out. But in the long run, Bitcoin could take share from the fiat money market. And then category 5 for me is just new and interesting things that you could only do with Bitcoin that either haven't been imagined yet or are just sort of emerging. And my favorite one to talk about, I talk about in the book, is Abra. Abra basically created the system whereby you can hold a key and hold Bitcoin in custody as collateral against a menu of various different assets. And on the back end, they've got a swap agreement with some other third party that basically provides the asset exposure, and it all links into the Bitcoin blockchain. This is something that I never could have imagined prior to Bitcoin, but there it is. And no doubt there are many new applications that can be done on Bitcoin, or done more efficiently on Bitcoin. Micropayments, streaming money, maybe via Lightning. We'll just have to see. There's no doubt new things that we haven't thought of that could be valuable, that will show themselves over time.
Awesome. So a couple of things that I wanted to ask about here. First of all, you mentioned the debt problem. Maybe for some of our viewers and listeners who don't know the magnitude of that problem, what is the magnitude of that problem, and what do you think something needs to be done about it? Why can't we just, population keeps increasing, productivity keeps increasing, which means, the cost of things should be going down. That's kind of like Jeff Booth's thesis of we should be able to make things cheaper and cheaper. And so the government can, just print enough money to offset the deflation and use that money to pay the debt. What's wrong with that approach?
Well, when you say it that way, it sounds pretty good. It sounds pretty credible. Spoken like a politician, or a government bureaucrat, so to speak. So first of all, you cited Jeff Booth. I think Jeff Booth is one of the most important voices in the space. I think it's really important. His thesis of downward trending in the price of the consumer basket, right? Because really smart, hardworking entrepreneurs are constantly trying to deliver goods and services better, faster, cheaper. That's huge. But as you pointed out, while they're printing money faster and they're inducing people to borrow at a greater rate, at a faster rate, than the efficiency gains, basically from reduction in the average cost to the consumer basket. So yes, we should be living in a deflationary world, which should make us all wealthier over time on average, unless the government stimulates so much that people borrow, basically at an increasing and faster rate, which offsets the natural deflation. And that seems to be where we are. So yeah, the scale of the debt burden is pretty breathtaking. The figure I have in the book indicates that total debt as a percent of GDP, it had been around roughly 150% until a little after when we left the gold standard. Mm-hmm. And then it just took off. And, the number I have in the book is roughly 325% of GDP, which is more than double what it was in the 1970s. This is total debt. But that was before the pandemic. So to be honest with you, the latest figure I'm sure is is over 350%. It's probably headed toward 400%. And that's actual outstanding debt. So when you just look at the last century of debt and you say, okay, is the debt as a percent of the size of the economy, of output of GDP, is it going up or staying flat or going down? And the answer is it's going up a lot. And that doesn't even count the cost of the entitlements. So the present value of those entitlements, the Medicare and Social Security, and I'm talking about the United States, but basically it's the same pattern across the world, right? It's the unpaid benefits primarily to the older generations. Mm-hmm. That's something like 1,000% of GDP additional to the total debt. So the numbers are kind of mind-boggling, and you really have to go through mental gymnastics. You got to really create pie in the sky scenarios to come up with outcomes where the economy grows faster than the debt burden. It's I'd say nothing's impossible, but it's really hard to come up with a scenario where it works out.
Yeah, so let me try to steelman the argument as much as I can, because first of all, I completely agree with you, completely agree with the thesis of the book. I'm just trying to use this show to go really deep. Sure. So let's try to steelman the argument. So first of all, unfunded liabilities, I could see a world where this is not a problem, because if you think of healthcare and social security, which is basically give you enough just to exist, for food and shelter, those things could deflate. So we could have breakthroughs in healthcare. We could have breakthroughs with robots building houses and stuff. And I have a friend who's energy guy, and he basically says, look, the whole economy is downstream of energy. So you can use energy to create anything, to create food, to desalinize water. So if we could just build nuclear power plants or something that can create a lot of energy whose marginal cost is very, very low, you could solve the unfunded liabilities. So let's talk about the actual debt, which is currently on the books. So you're saying 300% debt to GDP. Why is that a problem? Why can't we just grow the GDP in real terms? By how much do we need to grow the GDP in real terms, and for how long, without increasing the debt, to shrink the debt to GDP to a sustainable level? What is it, 100% or 60%? That's kind of the
Yeah. No, it's a great question. I think, more important than the overall level, obviously, as you suggest, is the rate of change, right? Is the growth rate. So, if let's put it this way, if the economy is growing faster than the debt rate, basically we should be fine, holding all else equal. Unfortunately, there's no evidence of that, right? So, going back to the question of austerity, it's like, okay, if GDP is growing at, I don't know, 2%, and the debt's only growing at 2%, should we be okay? Yes, we should be okay. But I just don't see that empirically. It kind of relates to, people ask the question of like, what could kill Bitcoin, or what could, significantly reduce the value, or harm the investment thesis. And I usually say, yeah, government rectitude. If the politicians could figure out how to spend and accumulate debt at a slower rate than the economy is growing, then that's bad for the Bitcoin thesis. But I just don't see it, right? I don't see it on either side of the aisle, so to speak. I'm talking about the US, right? Democrats run deficits, Republicans run deficits, everybody runs deficits, and it's mostly the same in countries around the world. So, yes, in theory, if you can grow debt more slowly than you grow the economy, then you, under those circumstances, the debt burden does not increase. At least does. Yeah, it doesn't. It could be, or should be, sustainable if those facts hold true. But I think that it's extremely unlikely that they will hold true in the long run.
Yeah, I completely agree. And that's like my answer to the Steelman, which is like the problem is democracy. And when I say the problem is democracy, I don't suggest that there's a better way than democracy. But imagine I run for president now and I'm extremely popular, but I say, look, guys, I'm going to stop printing money. Everybody's house prices will go down by 50%. The stock market will go down by 50%. And guess what? We're buying lots of our stuff from China. So like that's going to become more expensive. But we'll balance the budget and everything's going to be great. And then someone can just run against me and say, no, I just want to do what Shimon wants to do. Vote for me. So I will never be elected. And that's my argument for why, the government will keep printing money. But I just wanted to hear your
No,
point.
I completely agree. And in fact, the words you just used, which is, yeah, who are you going to elect? The one that delivers the goodies now versus later, is something that I put in the book as well. Yeah, it's so compelling. Anyone getting elected on a 2, 4, or 6 year cycle is going to, if you give them the option to pull the spending lever and spend in excess of what they're taking in taxes, they will do it. And the candidate that isn't willing to do that won't get elected. And so the path dependency there toward greater and greater deficits and debt seems inescapable.
Yeah, and I have actually a very interesting anecdote about that, which is like, so I'm from Israel originally, and in Israel, now the economy is doing amazing right now. Now we passed most of Europe in GDP per capita, but people don't know what led to that. So in the 80s, Israel was basically a socialistic country. So it's like the public sector was like, 60% of GDP or something, and they were bankrupt. They were completely bankrupt. And then they went to the US and they were like, I think it was Reagan, and they were like, please, just, save us from bankruptcy. And, we're a very important ally in the Middle East. So like, the Americans love Israel. And so they said, sure, no problem. We'll cover your debt. Basically, they kind of vouched for our debt. I don't know exactly the technical term for it, but they said, we'll get rid of the debt, but you have to like get rid of all of your public sector. You got to like get rid of all the unions. You got to like, and all these reforms that then the country did. And then in the 90s and 2000s, it was the economic miracle of Israel. It's like, okay, but it wouldn't have happened if the US hadn't forced us to do it. And by the way, the fact that the US forced us to do it was much better than us just defaulting on the debt, because like we kept the cost of capital very low, but did reforms, which never happens. If you look at like countries overall, it's like either you go bankrupt and you default on your debt, and then the cost of capital is really high, or you keep the cost of capital low, but then you keep the inefficiencies. So that's a good example of how somebody has to force you almost to do the right thing. And I don't think it's going to happen for like China or for the US, economies that are really big. So I fully agree with you about the printing money. That's probably going to continue into the future. And so then my next question to you is like, okay, let's say I have $1 million and I'm like Michael Saylor. I'm like, oh no, melting ice cube. They're printing money. I can do a couple of things with that amount, with that money. I can buy Bitcoin. Let's say I'm fully sold on the thesis of Bitcoin, but I can do some other things. I could buy real estate where the advantage is that I get the government subsidy. So I could just put 20% as a down payment. And that's like, again, a steel man. You probably can put way less than 20%, but let's say put 20%. And then as the government prints money, you see it now, right? You see it now with suburban houses. The government printed 30% more money. Oh, guess what? Houses in the suburbs went up by 30%. So that means that your down payment, which is like a fifth of the total, right, went up by a lot more. So that's like one option. Before I go to the second option, what do you think? Why would Bitcoin be a better investment than just buying real estate in major cities in the US?
Yeah. Well, I think that part of the answer is just the scale of the market opportunity and the rate at which it's likely to occur. So one framework I apply, for example, for my clients is I say, you know, what part of the portfolio should you allocate to, let's say, hard money assets, okay, inflation resistant or supply limited assets. And I talk about, okay, what if we have, what if we have something like the 1970s stagflation? And even if it's not to the same magnitude, I mean, even if we don't have double digit percentage CPI annual inflation, even if it's, I don't know, mid to high single digit CPI inflation, what's going to do well, what's going to perform well, what's going to protect you. So I look to that as a precedent. Now, in that period of time, there were a couple of asset classes that did very well. One of them was gold, right? Gold went 20x, right, approximately in that period of time, in that decade. And then real estate actually did pretty well. And when I fast forward to today, I have to consider the fact that real estate is a cash flowing asset more, in most cases. And it does have a cap rate and it does have a valuation. And the valuations are so much higher today than they were back in that period when real estate proved to be a strong store of value in an inflationary environment, that I can create a scenario or construct a scenario where, real estate really doesn't hold its own to the same degree because the valuations are just so much higher now than they were back then. So that's one answer. And I guess, the second answer has to do with, okay, how much farther can they push the envelope? So you are correct. Real estate is clearly the most levered major asset class, right? It is the most indebted, most encumbered. When I look at the hundreds of billions of value globally, well, actually, a lot of the global assets or global real estate is not as levered, but let's talk about the U.S. The U.S. for sure market is quite levered. So then I say, well, how come it's gone up so much historically? What you said was, oh, well, they printed a bunch of money and they lowered interest rates, and the value went up substantially. That's true. I would argue that a larger or a significant component of that, though, has come from the reduction in long-term interest rates. And I'm thinking of like the 10-year treasury and the 30-year treasury, because historically, I think mortgage rates mostly benchmark off of those long-term interest rates.
Yep.
And so when you wind back the clock and you say, oh, real estate's done great for the last, pick the number, 10 years, 20 years, 30 years, 40 years. Okay, but that's when the 10-year treasury went from, double-digit yields to under 2%. How much farther can they go? Well, they can go farther than they are now, but they can't go another, if they've already gone 1,000 basis points or 10 percentage points on that interest rate from, let's say, 12 to 2, I don't think they can go another 1,000 basis points to negative 8%. So I'm not a bear on real estate, to be honest with you. I think there's a very good chance that real estate in the U.S. could continue to perform well as they continue to subsidize it. I just don't expect it to perform as well as Bitcoin. And if I'm going to expound upon it further, I would argue that as levered as real estate is, I don't know how much more levered it can get.
Mhm.
But I was talking before about, what I'd like to see in the Bitcoin market. Can I see leverage develop in the Bitcoin market? And I'm talking about the safer, term debt type of leverage over time. Yeah, I can. So I could see actually the Bitcoin market becoming more levered in terms of term debt. The margin debt is a whole other story. And then I would also go back to the thing I mentioned earlier, which is, could Bitcoin demonetize real estate over time? In other words, what percent of the population owns real estate primarily as a monetary store of value or quasi money? And I think the answer is it's significant. And I think that portion of the real estate market could flow toward Bitcoin, such that even if real estate's going up and Bitcoin is going up, I can see Bitcoin taking monetary value share from real estate, such that more, at the margin, more value accrues to Bitcoin, even at the expense of real estate. So that's a long-winded answer to your question, but those are my thoughts.
No, that's perfect. And you raised 2 points here that are fascinating, right? One is the idea that, like, how much lower can they take interest rates? Like, I don't think too many people understand how the interest rates impact real estate. The idea is an average family, they say, okay, I have a budget, right? And I can spend it on rent or I can spend it on a mortgage, whatever, but there's a fixed amount of money that I have to spend on housing. I mean, housing is a utility. People sometimes forget. It's almost as if, like, any other utility that would have a monetary premium, we would think it's crazy. But like housing, it's a utility, right? You can rent it or you can own. And actually, you can see in Israel, for example, there was a time where it was like housing went up 10% year over year, and so that meant that the rent to value, the ratio was one of the lowest in the world. Like rent would yield you like 2%, but like you would just buy a house because you knew it would appreciate. So it's almost like a bond, right? There's the coupon, but then there's also, like, if they lower the interest rates, the price of the bond goes up. So it's the same thing with real estate. And so the idea is, like, rates are already at zero, like they can't take them much lower. And so that's one thing that I think is very important for our listeners to understand, which is like, look, there has been a bull run in real estate, also in bonds, also in stocks, but how much longer can it continue? And then the other idea is, like, technology actually disrupts real estate, right? Like Zoom, for example. You can go and work from El Salvador. I've been there. They have amazing beaches. I've been there many years ago when I was
Good
still
for you.
but no, they have amazing beaches and stuff. And like the main thing they don't have is jobs. But if, like, your job doesn't depend on location, that's like a big downward pressure. And you see this in San Francisco. Many people are leaving San Francisco, and beyond the amazing nature that San Francisco has, the main thing that's there is like VC capital that can fund startups and create tons of value, right? And then the other point, so basically this can be disrupted by Zoom and all of these other ways where you can live in a much cheaper place. But also the idea is that real estate is a claim on productivity. And I only recently started thinking about it this way, right? So if you have land somewhere, right? Historically, when Marx wrote, like, the Capital, it was like you had land, you had capital, which is like machines and stuff, and you had labor. So it's not very different today. It's just like they take different forms, but like land, because if you have to commute somewhere and you want to live in a city where the network and where your friends are and there's good schools for your kids and all of that stuff. So a claim on the productivity of this city is real estate, but wait a second, now the productivity is capped because of all this money that the government is printing and stuff. The real productivity, right, the real growth of the economy is capped. So the value that can flow into real estate is capped. And so that's something that not many people talk about. And then the other thing is, like, the rate of growth. So currently there's a lot of zoning issues of, like, you don't build too much real estate.
Yep.
But who knows if it will continue, right? Like, you can build high, you can build, far, and have self-driving cars. Like the real estate growth rate, nobody says that it's fixed. And so those two things are basically my main reasons to favor Bitcoin over real estate because like Bitcoin, the supply rate is capped. You know exactly how much Bitcoin will be. Some people say all the Bitcoin already exists. Other people say it's growing at like 1.9%, whatever, and there's halving cycles. Doesn't matter what you believe in, it will be less than the growth of real estate.
Yep.
And so, yeah,
I
those are.
totally agree. Real estate, the old saw in real estate is they ain't making any more of it, right? It's limited supply. Yeah, okay, that's true of the land. But as you point out, you can build upward. You can build vertically. And then yes, with respect to a claim on production, yeah, what you're saying is in the agricultural era and in the industrial era, the means of production were very much tied to land. Arguably, there was a shift when we were running around in the bush. Land was pretty much infinite. Then we moved to fixed agriculture when land was primary. I mean, land really was the primary means of production. Then, as we transferred into the industrial age, okay, capital that sat on top of the land took a larger share of the total means of production, but the land was still quite important. And yes, here in the digital age, in the internet age, more and a growing portion of the economic activity happens in cyberspace, which has a very small land usage, right? Yes, we have data centers. Yes, people must, sit in an office or a cube or something as long as as long as people are working, as long as labor is an input into the economy. But yes, the portion of economic activity that accrues to or pays a rent to land is reducing over time. It's actually, I think, arguably as a percentage of the economy, reduced for centuries now.
Mm.
And yeah, I fully agree with you. Those are all good reasons to be less excited about owning real estate, relatively speaking.
Yeah, awesome. Okay, so the next thesis, the next Steelman argument is Warren Buffett's argument, right? Bitcoin has no cash flows, right? Now, to Steelman this, it's like, okay, so Bitcoin has no cash flows, so it can appreciate in price instead of having cash flows. But why not put the money in something productive, right? Look, Elon Musk is sending like rockets to space, sending satellites that do internet for everybody. So like if I have $1 million and it's a melting ice cube, I don't even have to risk it by choosing one company. I can buy an index. By the way, I have some of my money in the stock market and I bought a leveraged like 2x NASDAQ. And what's cool about that is when I bought it at first, I use interactive brokers. They had a warning pop up say,
Yep.
this is not suitable for like investors. It's only for speculation, whatever. I'm like, ooh, tell me more. This makes it sound even more interesting because you can't get a margin call. But in any case, why not put the money in a basket of productive companies? You don't even have to choose them. And the claim there is like, look, the government prints money, the prices will adjust. I mean, the caveat here is that you have to believe that all governments will print money, which I think it's a pretty safe assumption. Like there's many macro podcasts out there that talk about like, oh, the US versus China. I think, look, if one country prints money, the incentive of the other countries is also to print money. So essentially, you can either buy the US index or a global index and just like let your money grow with the stock market and maybe even borrow against it. Interactive brokers lets you borrow at like 1%.
Yep.
On margin. So why not put the money in the stock market?
Yeah, look, and here's where I put my wealth manager hat on. By the way, the usual disclaimer: none of this is
It's
investment advice.
entertainment. What we're doing here is entertainment.
That's right. But in all seriousness, my clients own a portfolio of assets, right? They own stocks, they own bonds, they own real estate, they own Bitcoin. So, do I think that equities are not worth owning? Of course not. Would I rather, do I think that Bitcoin has a higher risk adjusted expected return than stock indices? Yes, I do. Why do I think that? Well,
why? That's the main part. Why do we think
equities do generate cash flows, generally speaking. However, the valuations are higher now than they have been historically. Also, those valuations they are sensitive to interest rates. And so, especially for, let's say, growth stocks, quote unquote growth stocks, those do great when interest rates are falling, but they don't do so great when they're either flat or rising. So that's another consideration. And for me, you mentioned Warren Buffett. Look, I was raised or trained as a value investor. It took me a really long time to understand why gold was worth owning, for example. Studying that period, the stagflation period that we talked about before, helped me understand why gold can have a place in a portfolio, especially it can have a place in a portfolio under such macroeconomic circumstances like stagflation, because under such circumstances, most assets actually lose real value. And a hard money asset like gold actually gains value, at least historically. So yes, it's hard when you're trained as a value investor to see that a monetary asset can be worth owning. And the beauty of Bitcoin is that the investment thesis we talked about before, the areas that it can take market share from, whether it's gold, whether it's fiat money, whether it's offshore assets, whether it's demonetizing other assets like real estate, the total addressable market or the total potential upside, is in excess of $100 trillion. And so you've got whatever, pick a number, 50, you can make 50 times your money, something like that, 50x upside, maybe even 100x upside. So yeah, that's a pretty attractive trade. There aren't too many stocks where I think there's a shot at making 50 to 100x, in a whatever 10 or 20 year period. I mean, yes, those opportunities do exist, but most of them are extremely risky. Most of those opportunities are either illiquid, they're venture capital style opportunities, or they have, let's say, a high probability of going to zero. And I actually think that Bitcoin has a relatively low probability of going to zero. I think the number I used in the book, I think I said something like, a third probability that it goes to zero and a third probability that it doesn't move much in price and a third probability that it goes much, much higher. And that was a couple years ago before COVID. And so, then versus now, I think it's significantly lower probability of going to zero, and significantly higher probability of making a multiple, even from the current price, which is already a multiple of when I wrote the book. I think when I published the book, I think the price was like, I think it was 8,500 or something. Yeah.
Yeah, no, this is fascinating. So you raise one really good point here, which is like the idea is how efficiently priced is the opportunity. So like, even if we believe, I actually believe, and I was talking to Jeff Booth. It's fun. I met him at the conference in Miami. We had a dinner together, and I'm really, the depth of his understanding of, like, let's say if the technology deflates by 7%, the government prints money by 10%, CPI is the difference between those two, which is 3%. Awesome, right? But then the question is like, okay, how efficiently are things priced? And like with equities, you have some of the smartest people in the world, sitting and looking and analyzing every little detail. And so everything is priced in. For me, what's really attractive about Bitcoin is it's still such a niche asset class that not too many people are looking at it. And so there's a lot more upside to be had, even if we believe that it will eventually grow at the rate of productivity growth. And then the second thing, by the way, which I've raised in the past, but I want to hear your thoughts on it. It's a little bit of the Michael Saylor thesis of like, how efficiently is the vehicle converting inputs into outputs, right? So like, you think of a company like Google, it's like amazing, right? Great service. You invest money in it. They hire a bunch of engineers. They improve their algorithms. It spits out ad revenue or whatever revenues they have. But you still have to pay for their parking lot. You still have to pay for their catering. You still have to pay for all of these other things. So then you have like a trade-off of like, okay, we're capturing some upside, but there's also friction. There's also a little bit of inefficiency in this upside. And Bitcoin, because it's such a synthetic thing, it has nothing. It has no cash flows, no employees, no anything. It's literally just a claim on future productivity plus the mispricing of the market of this claim of future productivity. And I find this to be like more and more appealing with every year that passes. And initially when I heard about Bitcoin first, I mean, that's the second professor that had the most impact in my life, negative impact. I was working at a cloud security startup in Silicon Valley, and it was all these like Stanford professors in cryptography. They were all talking about Bitcoin and how amazing it is as a technology, but all of them, literally 100% of them were like, yeah, the government will never let it exist. And so like, it's a shitty investment. That was 2012. So it's like, if only I hadn't listened to the professors. But my point is like, the whole idea is that it's a very clean claim on the future, and it's very, very mispriced. Like very smart people really don't understand it. And my investment thesis is like just bonds. I was just looking at bonds. I was like, okay, bonds are negative yielding. And Bitcoin is also negative yielding, but it's negative yielding 2% now because 2% more is created every year. But it's like, the next halving, it will be less than that. The next halving will be less than that. So it's like, either you can put your money in something that yields 0, or you can put your money in something that yields negative X%. What would people choose? That was kind of my thesis when I first bought, like in 2016, I first bought my Bitcoin. And like the more time passes, the more I'm starting to think this is like the purest, the purest way of looking into it. And yeah, there's a lot of noise and a lot of volatility and stuff. But what do you think about that?
Well, gosh, there's a lot wrapped up in what you just said. I mean, look, as far as Bitcoin versus bonds, you got Ray Dalio, who runs the world's largest macro hedge fund, who went on record, I don't know, a month ago saying, yeah, I'd rather own I'd rather own Bitcoin than bonds. Okay. Well, your thesis or your statement that you just made, Shimon, has, basically the same thing was said by the world's arguably greatest macro investor. Okay. So that's one thing. As far as, government prohibition, let's say, right? That's the word I use when talking about whatever government's banning it, stopping it, what have you. The thing about prohibition is it doesn't work, especially in this country, right? People talk about, there's alcohol prohibition, or there was gold ownership prohibition. And of course, the difference compared to Bitcoin is you think people want to drink alcohol, just wait till you tell them that you're going to print government money at a rate of 10 to 20% a year, and that they can't own the hard money. Oh, and by the way, that hard money, Bitcoin, is extremely difficult to confiscate, right? Because people can hold their own private keys, shard them, do multi-sig, use brain wallets, whatever. Extremely, extremely hard to confiscate Bitcoin as they confiscated gold, as it was under Order 6102, back in the 30s. So, yeah, it's I don't worry much about prohibition. I especially don't worry much about prohibition because when you really analyze it, as still people haven't done, I mean, all you have to do is read the popular press to see what economists and other, I don't know, luminaries, quote unquote, are thinking about Bitcoin. They obviously haven't done their homework, many of them. And so when you really get down into the facts and circumstances of it, you realize that Bitcoin is a fundamentally freedom promoting and freedom loving thing. And that is, that's what most of the West was built on. You could argue that the current activities in China, the crackdown, let's say, both on Bitcoin trading and ownership and transacting, and obviously mining, is indicative of what a government that doesn't have values of freedom, is likely to do to Bitcoin. So, that fact puts into stark contrast, the let's say, I don't know, American values or Western values, as distinct from those of, let's say, governments of certain other countries. So there's that. And then as far as your comment about Bitcoin being sort of a pure, efficient type of money, I do agree with that. I think of Friedrich Hayek, and I think of his book, Denationalization of Money. And one of the things he talks about and quantifies is the inefficiencies in transacting between currencies. So much dead weight loss there. And then the second thing, which I wrote about in the book, which is actually, I think, it's the most crucial fact as well as least understood fact about money, is that the best money is pure money. In other words, everything in the world is a little bit money. Basically, mostly we talk about it as liquidity, but suffice to say that pretty much everything in the world has some monetary attributes and can be used as money under certain circumstances or in a pinch. But the best and most effective money is useless as anything other than money, right? So the best money is, Apple stock is not the best money, right? Apple stock is mostly an equity. It's mostly an investment in a company. Cigarettes, yes, they can and are used as money, but they're not the best money. They're mostly, utility value as opposed to monetary asset. Today fiat monies are closer to perfect money, let's say, than the two examples I gave, or salt, which was used as money historically, or glass beads or anything else. But of course, fiat money has its downsides as well, including the inflation and the supply and the censorship, et cetera, et cetera. So yeah, it took me personally a while to realize that the best money is useless as anything other than money. But I think that is one of the most crucial facts about money, which applies to Bitcoin, that most people still don't understand.
Yeah, that you put it so well. Like all these people that basically say, "Oh yeah, we'll have all of these things in our wallet, and when I buy coffee, I'll sell a little bit of my Apple stock to buy the coffee, and all will be good." It's like, okay, but then when Apple launches a failed product, you can buy a little bit less coffee. So
That's exactly right. That's exactly right. And by the way, that same logic applies to all digital assets, right? It applies to the other cryptos, let's call them crypto assets. People, many people still talk about utility in a crypto asset as a positive thing, and it's positive for whatever utility that network is trying to achieve, but it is negative for the use of that crypto asset as money.
Yeah, no, I completely agree. And this show, basically, Alex and I, my co-host, who couldn't be here, by the way, but he has a little bit of other coins, and I'm kind of a Bitcoin maximalist for now. And by the way, I really believe in DeFi, but like DeFi on top of Bitcoin, and I think it will be created. But anyway, that's another rabbit hole. I completely agree with you. I almost feel, I know you have a hard stop. We have so many things to discuss. I would love to have you on the show again, but I really wanted to dive deep into some of the issues you raise in the book. When I read your book, I was almost like, I agree with all of this, and I want to ask you a couple of questions. So that's why I'm super happy we had this episode. Can you please tell any final thoughts you have for our listeners and viewers? And then where can people find you, your work, your book, anything else you want to talk about?
Yeah, thank you, Shimon. You asked some great questions, and you did go a level deeper. I appreciate you pushing me a little harder on the surface level stuff. So great stuff. It's been a pleasure talking with you. And yeah, as far as finding me, Twitter, obviously, Edstrom Andrew is my handle. My personal website is andyedstrom.com. You can find other podcast appearances and discussions and things I've written there, as well as the book. The book is called Why Buy Bitcoin. It's available on Amazon. That's the easiest place to get it. You can also get it on Apple and other sources as well. And I also stack sats weekly with Swan Bitcoin and swanbitcoin.com/Andy. And you can get a little bit of free Bitcoin if you sign up there as well.
Awesome. Well, thank you so much again to all our viewers, I think Saifedean's book and Andy's book are the best two books if you want to get into Bitcoin with a no hype, no like big bells and whistles, just like the meat of it. I would recommend those two books. And thanks again, Andy. It was a really pleasure having you on the show.
Likewise. Thank you, Shimon. I really appreciate it.
Awesome.